or good afternoon, good morning. This is Michelle Martin with Joy Michelle Realty Group, Strive Realty, and Meredith Driskill with Fairway Mortgage is joining me today. And we want to talk a little bit about down payment assistance program. A lot of first-time home buyers don't know their options, and sometimes they start with a realtor, and then the realtor will say, you know, I'm going to put you in good hands with a mortgage lender because they're the ones that can help navigate the full process. As a realtor, we pretty much don't know. I mean, we really don't know what to tell them besides, this is the specialist in the mortgage industry. She can give you all the answers. We know enough, but not enough to lead our client in the most accurate, best direction. So the best thing to do is contact your realtor first, because your realtor can tell you, whatever type of home that you're looking for. Sometimes you might need a traditional lender. Sometimes you might need a different type of lender. Depends on what type of home, what area. But the realtor can help you in the location. As far as most of my clients are in Johnson County, and Meredith services Johnson County and tons of surrounding, but she knows all the local people and the contacts and exactly what to do to get you from point A to point B. So down payment assistance program, it's not just for first-time home buyers, but it's also for second-time home buyers. But Meredith's going to tell us quite a bit more about the different types of down payment assistance program, who can qualify for them, and kind of any information to help any buyers out there, whether it's been 10 years or 20 years since you've bought a home. But so many things have changed over the past, every year they change, but so many things have changed if it's been a while since you bought a home. So Meredith, you can do first-time home buyers or just the whole gamut of all the things that you know about down payment assistance.
Okay. I am approved through 3 separate types of down payment assistance programs. They are for repeat buyers and for first-time home buyers. It really doesn't discriminate on either. Technically, what a first-time home buyer is, it's if you haven't purchased a home in 3 years, and the way that we basically prove that is looking at your tax returns and seeing if you have any type of mortgage interest on your tax returns, or if there's anything in, deed of records or anything like that would show that you've owned some sort of land or anything like that. But that doesn't even necessarily matter. You can get down payment assistance if you are a repeat buyer, and you have to have a 620 score to be approved through the down payment assistance. And the reason I got approved for 3 separate programs is that each program is going to be a little bit different. So I want to make sure that I can service my client the best way that I can and put them in the best program that's going to fit their needs the best.
Okay. So the 3 different programs, and I only know a little bit about it just because you've helped some of my clients with down payment assistance, but I know there might be a grant one. So there's different ones. What determines what they qualify for?
One of the down payment assistance programs does have a grant option, and it does have a 3-year forgivable loan option. So basically, 3 years after you make your first payment, if you got the loan option, then you that money is forgiven as long as you don't sell the property at that point. A grant is just what it is. It's a grant. You borrow that money and it doesn't ever have to be paid back. But each one has a little bit of a separate, like the one that does have the grant is a little bit more strict on credit scores, and they're going to charge you more the lower your score is, for example. So if that's not going to be the best thing for them, and we're kind of looking to be tight on funds, or we're trying to get as much bang for our buck as we can, I'll switch them over to a different down payment assistance program that is a 30-year non-forgivable. So you just pay back what you borrow. You never have to pay interest on it. You never have to make a payment on it. So if you ever sell the house, you just pay back what you borrow, or if you ever, pay the house off early or in 30 years or whatever, you just pay off what you borrow. And each one is going to have their own interest rates. So the down payment assistance programs, they set the rates for us, and they are very competitive. But it kind of also just depends on the day. I like to go in and look and see what's going to be the best thing for them for qualifying purposes, for money purposes, for everything.
Okay. Is there an income, is it an income based as far as down payment assistance? Like, they need to make under a certain amount or over a certain amount?
Yes, but it's going to depend on the county. So like Johnson County, Johnson County is pretty high. It's right under 100,000.
Okay.
And then in Tarrant County, and I just know some of these off the top of my head. I don't know all of them, but
Okay.
Tarrant and around Dallas, I think, is right above 100.
Is it really?
Yeah.
Okay.
Yeah.
So
For a family.
perfect. And down payment assistance, what does that cover? Does it cover, your escrow? And a lot of buyers probably don't know what escrow is, but does that cover, is that like the 3.5% or the 5%? And what else does that, what kind of like price of home and the amount that it covers?
Right. Okay. Okay, so you can get up to 5% down payment assistance. Now, the lowest down payment option that you could get would be FHA. If you're doing an FHA loan, is 3.5%. Conventional, you can go as low as 3%. So if you get up to 5% of that down payment assistance, you have almost 2% of a coverage for some of your closing costs as well. So if you're doing like what she was talking about earlier was an escrow account, I like to explain it as kind of a savings account for your taxes and your insurance, because you're gonna pay those in your payment every month, and the mortgage company will put those taxes and that insurance into that escrow account for you, and then pay it on your behalf whenever they're due the next year.
Okay. Well, and I guess because a lot of people might be watching this that have never bought a house and how things have changed, and so a lot of people wonder about how much closing costs are, and that's another thing that, depending on the price of the home and the area and the tax rate, that's something else that your lender can help you with, like Meredith can help you with, and she's the one that can give you the most accurate number, and with the help of title companies too. We all work together, but as far as the number figures, even realtors, we can give you a roundabout number, but the best person to figure that would be your lender. So, I know that's, everybody's question is, how much are my monthly payments gonna be, and how much does it cost to close? And really the lender's the one that helps you with to determine what those monthly payments are, and a lot of people don't realize. So I'll get a lot of people call and say, I need a monthly payment under $750 a month, and then I say, okay, $750 a month, and then add your taxes and your insurance on top of it, because a lot of times taxes and insurance is $750 a month, and I don't think a lot of buyers realize that. So.
Yeah, and I don't know that a lot of people don't know that you just pay all of that up into one payment too. So I always try to explain that to everybody. And a lot of the time, especially if I have first-time home buyers, I try to discuss that monthly payment option and ask them where they want to be, because maybe they qualify for a $275,000 house, but maybe they want a monthly payment at $240,000. So I'll say, well, okay, you're approved for up to $275,000, but you probably need to be looking in the area of $240,000, because this is the monthly payment that you're going to want. And then if there's not anything that you end up wanting in that $240,000 range, time to have a family discussion and see what maybe you're paying for right now that you're not really using, and that you can cut out so that you can afford that $275,000 a month and you feel comfortable about it.
Yeah. And I think so monthly payments too, like your area and your tax rate, and I guess the age of homes determine insurance, and so just the age of the home and the area can probably increase or decrease your monthly payment. What do you think?
Yeah.
It can go down $300 or up $300. just depending.
Yeah, I've noticed, especially here, you know, having a newer roof is a really good thing, but I'm not going to talk about insurance. That's
No.
that is not my specialty. But I do notice that, you know, the better and the newer ages of the home sometimes does help on your insurance. So, and yeah, taxes are a big thing too, and that does kind of matter where you're at, within what town and what county and stuff like that.
Right. Well, and I think so. We probably covered down payment assistance program as much as we think we can, and every individual's different, every family's different. So the best thing to do is reach out to your realtor, and then your realtor, Michelle, can refer you to a wonderful lender like Meredith, and happy to answer all the questions, any questions, and it's best to do a consultation before you actually jump into it to kind of figure out where you're at, your goals, where you want to go, and that's what we're here to help with. So thanks for watching today, and stay tuned for more.